Welcome to Invest Out West podcast. I'm Nat Micken.
And I'm Kahlia Micken. We are a husband and wife team who live and invest in Western Queensland.
Join us on our journey of creating passive income through mindset, business, crypto, and property investing. Welcome to Invest Out West podcast episode number 20.
Today we'd like to lead with a quote from Peter Lynch that says, "Know what you own and know why you own it."
Yeah, today we're going to do this podcast about diversification, why we diverse our portfolio. Anybody that sort of regularly listens to us will know that our war cry sort of is diversification. Now, something that's just happened recently has sort of made that more clear to me why we diversify. This podcast, we sort of usually don't go too much into politics, but this time we are going to talk a bit about politics because that's sort of the reason behind this, like this topic in this particular episode. When the federal opposition came out with their plans, like a few weeks back, about nuclear, nuclear electricity generation, so just to be clear, like we are. We're definitely not against nuclear. We're definitely okay with the nuclear idea. But when the opposition came out and said that they were going to roll out these nuclear reactors if they win the next election, sort of straight away I sort of thought, I was fairly pleased with the announcement, but at the same time, I sort of thought straight away to how will this affect our investments? Now, people who listen to this podcast know about how that we invest in property in these outback towns, inland Queensland. Now, two of these towns, namely Richmond and Julia Creek, one of the reasons that we invested in these towns was because of the vanadium mines that are projected to be opened up over over less than 10 years from now, sort of time frame is what is sort of what the projections are mostly. Now, one of these mines is projected to have a 100-year lifespan. Now, for anybody who doesn't know, vanadium is traditionally used in steel manufacture. Now, it's put as into the steel as it's being made to add strength. That's sort of basically what traditionally vanadium has been used for in the past. But there has been a lot of tests in recent times about what they can build, like what they can use the vanadium to build batteries. So, like they actually called vanadium flow batteries, to be used in conjunction with renewable energy, like renewable like wind farms, solar farms, them sorts of things. So, when I sort of thought about this announcement, I thought, well, okay, just logically, it would seem to me that maybe the need for the vanadium batteries mightn't be as much now with having nuclear generation, like electricity generation. So I think there still will be some demand, but it may not be as much as what it once was. So being that we bought our sort of our early property investments in those two towns, nearly the same time actually. Both them houses we sort of bought nearly at an identical time, and one of the reasons was the vanadium mines that were projected to open up. So that wasn't the only reason. There was other like industries coming into those particular areas as well, not just the vanadium that sort of made us move towards buying there. So our investing strategy is to look at a town that has strong demand for rental, for rent, like residential rentals, and then we look at what is projected in the future for like a new industry to come into that town. So that's why we buy in the towns that we buy, is because we have this system that we follow to like how we find towns that we sort of reckon are good places to invest. So this sort of leads me now to why I'm thinking along these lines, is that with those two towns maybe not having that investment as strong as we originally thought, that will mean the other towns that we have rentals in will sort of need to lean more on those towns with their future growth and future industries coming into them towns. So that's sort of what I really wanted to talk about, was the need, I believe, to diversify across different towns that have different industries behind them that keeps that town afloat, especially in these small towns that we're only talking several hundred people, that might only have 2 or 3 industries behind those towns. One industry shutting down can make a huge impact on that town. So we sort of don't have a crystal ball to look at and say, okay, in the future this industry might not be around, so therefore we shouldn't invest there. Because we don't have that foresight, then we just have to take a chance sort of thing on every industry continuing, but knowing also that some industries may not continue, but making sure we're diversified across a whole range of different towns and industries that will cover that risk type of thing. So yeah, that's just what I wanted to sort of mention in this podcast. Kahlia, what did you want to add to that?
Yeah, so I don't think I had a lot to add, but I guess what I wanted to quickly touch on was just what Nat started with about the reason, of, like, I guess the purpose of being diversified. When you look up the word, when you do a Google search and you say what defines diversification, the best phrase that I could find to put it into a phrase says, diversification is the act of investing in a variety of different industries, areas, and financial instruments in order to reduce the risk that all the investments will drop in price at the same time. And that's exactly what Nat has just been touching on. In the terms of how we invest and why we invest the way that we do, is purely for that reason. If something doesn't perform like we had anticipated, there's always another thing that will perform and will cover that gap, so to speak. And so that's why we do love investing, in such a broad area. We should actually do some figures and figure out how much, like how far the distance is between, like the houses that we own, to where we live, and sort of what sort of footprint that we've got across Australia already. But ultimately, the reason why we have investments over what would be a considered a significant area is solely for diversification. We don't want to own all of our houses in one town. We don't want to own all of our industrial stuff in one town. We don't want all of our self-storage in one town, because you have to find a balance, and that's why we spread our assets and therefore our risk far and wide, because like they say, when something's down, something else has got to be up, and that's the focus that we have. And even speaking on that, It's also why we just don't focus on one type of investment because, for example, we've got, like our residential houses, and then we've got the self-storage, and we've got like the industrial shed, and often even in the investment space itself, when something is up, something else is down, and so that's why we don't put all of our eggs in one basket, because no one's got the crystal ball to see what the future holds. But ultimately, we can all be, responsible in being diversified and in managing our own risks. So yeah, that's sort of why, like, I'm very, very passionate about being diversified, and I've sort of seen how being diversified has helped us grow, because there's always something up when something is down. So yeah, that's probably all I had to touch on, really.
Yeah, definitely. I just wanted to touch a little bit more on some other towns that we invest in. So I've already pointed out Richmond and Julia Creek, but not just to pick on those towns. We've also not long purchased a industrial block in Barcaldine, which one of the reasons we bought there was because of the big push, you could say, for getting a lot of renewable energy projects happening in that area. So that's why we that was one of the reasons why we decided to invest there. Now, I don't really know the full details, but from what I can understand, Peter Dutton sort of saying that if he wins the next election, he will wind back, will not stop renewable energy projects getting built, but probably they won't be rolled out as fast, I guess, is what I'm sort of reading into it. So that may even slow down that sort of demand that might have been in Barcaldine as well. But just to point out another couple of towns that we're diverse, our portfolio is diversified across. We've got also a house in Blackall and another one in Hughenden, which those two towns we didn't even consider renewable energy projects when we bought in those particular towns. So that to me will, that them towns will stand strong, in our investments, even if there is a lot of renewable energy slowdown. If the opposition wins, and even in Julia Creek and Richmond, like the Richmond gold mine that's projected to open up over the next few years, that will definitely help the Richmond economy. And both Richmond and Julia Creek is having a lot of investment going into the cotton industry in those towns as well. Never been much cotton growing there in the past. It's only been sort of over the last few years that there is a big push for the cotton industry to get into this sort of area. There was some small amounts of cotton growing there previously, but nothing to what they're talking about, sort of what's coming in the future. So that those two industries will definitely help these towns, even if the vanadium sort of doesn't perform like we were hoping. So yeah, just that's sort of just what I wanted to point out. Definitely need to be diversified across different industries with your rental portfolio, I believe. So Kahlia, do you want to add to that?
Yeah, so I was just thinking, as Nat was speaking, about why would we bring this topic as a topic? Like, why would we bring up the topic of diversification, on our podcast like this for an episode of our podcast? Because ultimately, anybody who follows us would understand that we say all the time it's all about doing your own research. And even though we're talking about this, potentially what could happen in the future, or potentially this is what it could lead to, it doesn't mean to say that we're not bullish on the here and the now. again, doesn't mean to say we're not bullish on the projection of these communities and these asset classes and these investments moving forward. But ultimately, the reason for this podcast is just to, I guess, reiterate the fact that it's all about us doing our own research. Here we are, we've already got, invested interest into these communities, but we're still acknowledging that this is a possibility, and how do we factor that into our portfolio and into our investment strategy to move forward in the best possible manner that would tick our boxes. And so it's just all about keeping your finger on the pulse, like keeping in touch with what's happening in that specific area and being dedicated to being, to keeping up with it, so to speak.
Yeah, for sure. I actually never saw that announcement coming from the opposition. It sort of caught me sort of off guard when they announced that they were going to do the nuclear in such a big fashion as what they come out and announced. And so, like I said before, we are pro-nuclear, so it's not we're not here saying that we're anti-nuclear or anything. We're just saying that this could affect our investment portfolio over the long term. So look, that's probably about all we've really got to talk about on this one. I've seen this sort of unfolding over the last few weeks, and sort of have thought about how it might affect us and what we might do going forward from here, how that might affect our future investments, what we might start to get into that we hadn't thought about in the past. Of course, this will sort of, once like this, what I'm talking about now, will be more something to think about after the election, and if the opposition gets in, then we'll start to think about how we might be able to position ourselves to get in line for the nuclear side of things. So that'll be something to think about and something to talk about on the podcast moving forward. So I think that's about all we've got on this one for now, and keep living the dream.